Alright, so just let me run through a disclaimer first. Just take note that IG provides an execution-only service. This presentation is purely for educational purposes and it does not take into account specific investment objectives, financial situation, or particular needs of any particular person. Okay, moving on. So I assume that most of you have attended my webinar before. Just a quick run through in terms of the thought process and trading. I think I've been doing webinars for the past 1 or 2 years. Not only webinars, seminars as well. And you know, the strategies that I use has always been consistent, has always been the same. I use a lot of price action, and the whole idea is to use the high term time frame, like a daily and 4-hour chart, to get an idea of what the market is doing. Okay, and basically I just want to see whether the market is trending up, trending down, or consolidating. And once I have a bias, that's where I lock in my reference chart. Reference chart means I use that chart to gauge whether the market is still going for me or going against me if I enter the trade. And I start planning my trades using the lower term time frame. So because if that's the case, right, the risk to reward tend to be more positive more often than not. Okay, because I'm planning my trade based on lower term time frame. I have set a bias on the high term time frame. And sometimes, if even I get stopped out on a lower term time frame, if the high term time frame is still telling me the same story, I'll be more than happy to look for a second entry. Okay, or entering the same trade the second time, even though I got stopped out the first time. All right, so price action is a key thing I use. Again, I always mention that psychology is a big thing in trading. If you have not found your consistency, you really need to look at your psychology. Okay, especially for those who have been trading for quite some time, jumping from one strategy to another. There is no holy grail. Everything is your mind. Okay, everything is your psychology. For me, meditation really helped me in my trading. After I embark on meditation, after a few months, I really could see improvement. Really, all right. This is not a magic trick, but once your brain is calm, once the noise in your head stops, you can really see the charts clearly, and you are very decisive. Okay, which means that if you're wrong, you get out. No regrets. You don't think about the past, and you just look for another trade. All right. Or same thing. Or if you make a good profit, yeah, you'll be happy for a while, and then you go back to your neutral position and look for another trade. Okay, so very important psychology. All right, so moving on, let's talk about the markets right now. Let's take a look at the S&P. Any of you surprised that the S&P made a new high? I was slightly surprised actually. I think the catalyst was Yellen's testimony. Yes, last Thursday or Friday. So I had this chart going on. I mean, that's the thing about uptrends, right? Just when you think that it can't continue upwards, it goes higher. Okay, but if you look at, when was my last webinar? Just last week, 11th July. We were in the middle of nowhere last week, and I did mention that it's better to stay out. Okay, support was this line that I drew, anywhere around 2405. Yellen came out to say something good, and basically the market made a push higher, and we've made a new high. Have we seen this before? Very common in terms of the indices. And right, just when a lot of the bears thought that, finally the big correction is here, the market makes a new high. So who are we to say that the market is not bullish? Even though fundamentals does not add up, who are we to say that, the market is not bullish anymore? Okay, even though we have gone through a 7-year bull run. So if you're a pure technician just like me, okay, you got to train yourself to look at a pure price perspective. Don't overthink, don't overanalyze, and just follow it. Okay, if you're wrong, get out. If there's a trend, follow it. And if you look at where we are right now, the S&P, there's no way to it. It's an uptrend. Okay, you look at all these previous highs around these levels here, it has been breached. Okay, I think the high that we made on 20th of June was around 2450. That has been breached. Okay, let me delete some the other lines. Okay, that has been breached, this area here. Okay, very clear cut. So the trade plan right now is bullish. Okay, I don't see any divergence on the 4-hour. Daily chart might have a slight divergence, but not yet. 15 minutes consolidating a bit. Okay, so let me go to a 1-hour chart. Okay, so you can see that the 1-hour chart is consolidating. So your bias on the heightened time frame, daily is bullish, 4-hour is bullish, 1 hour is consolidating. All right, so what I'm looking out for, if we can break a new high here around 2462. If we break above, I'm happy to take it up a notch. Alternatively, you might be able to look for some form of support here. Okay, the risk to reward should just be, if you take any long based on the support here, we just below this low here, and hopefully it comes down and then it starts moving higher from here. Okay, so either you wait for break the upside or you let it come back to support. That's it. All right, so that's the S&P for you, because it's looking very bullish. If you look at the moving averages, everything's pointing nice upwards in a strong momentum, strong speed because of the gap between moving averages. Support is around 2456. Yep, somewhere here, around here. So just be patient. Just be patient. I wouldn't, even if I'm bullish, I wouldn't buy inside 1 hour consolidation. I'll pick my entries. All right. So that's the DAX for you. I mean, looking the sorry, there's the S&P 500 for you. Looking at the DAX right now. Okay, you can see that the DAX is not as bullish as some of the US indices like S&P, because even though most of the indices have broken new highs, okay, the DAX is still within this range. I drew this box last week during the webinar, and I also drew this line here. Yeah. So right now there's this trend line that's supporting the DAX. I'm not too sure what the DAX is doing right now because it's just consolidating. But what I know is the strong support is around here, 12,300 or so. Intermediate resistance at around 12,500 or so, and the key resistance at around 12,850. Okay, so I'm only keen to trade in between at those levels. Yeah, but you can see at the DAX, when the S&P made a new high, it tried to push higher. Okay, but you can see that it got nowhere near the previous high, and right now it's coming down. Okay, so I'm keen to see what happens near the support at around 12,003. Okay, many people ask me, do I respect trendline support more or horizontal support more? The answer is simple, horizontal. Trend lines are just a gauge for me, just to tell me that where's the rough support and resistance area, and if there's a confluence of trendline support and horizontal support, that's even better. Like for example here, okay, you can see that the trendline and horizontal support came together, and not surprisingly, the market start pushing higher from here. Okay, but right now where we are, yes, it might be touching a trendline support. Okay, but again, trendline is discretionary. I might draw it like that. Some people might draw it closer to the support line here. Okay, so it's really discretionary. So I'm a bigger fan, or I listen to the horizontal support and resistance much more. Okay, but right now for the DAX, I don't have much of a trade plan. I know the shorter term time frame is quite bearish. Okay, but I'm just be careful. I'm more keen to see what happens when it comes to the support here at around the 12,350 or so. Okay, this is a 4-hour chart I'm looking at. All right, this is for the DAX. Just give me a moment, yeah. Okay, so let me take a look at what's the next one? The Japan 225 or Nikkei. Okay, now this is Nikkei. Now last week we were in a really nice area. We were somewhere here. Here. Okay. And I did mention that, this level 20,200 was pretty nice resistance. You can see a touch here, touches here. I know this was a false breakout. Okay, false breakout because immediately once we made a new high, the subsequent candle is a huge bearish engulfing candle. So it's a nice fake or false breakout. You can see some touches here as well. Okay, so for those of you who took a bit of a counter trend trade, good job. I mean, basically, you've taken a short here, stop loss here. Your target might be somewhere here. Maybe you're still riding the trend, the short-term downtrend. Okay, so that was a setup that I presented last week. So far, it's working out. Let's go back to my drawing tool. Okay, so right now, if you look at the Nikkei, right, nothing much to do right now as well because it's neither near the key support or resistance levels. Okay, last week was a much better level, higher probability. Okay, because like I mentioned, there was a nice bearish divergence happening here. The MACD is making a series of lower highs, but the price is making a series of higher highs. So nice bearish divergence. Not surprisingly, it's coming down. Okay, So right now, I'm not keen to touch the Nikkei as well because we are a bit of a middle of nowhere. Again, similar to the DAX, even though it's near trendline support, all right, I seldom trade off trendline support only. Okay, I need more compelling reasons to get into a trade. Okay, maybe I'll entertain somewhere near 19,008, then I'll see what happens. But it seems that we are looking for some kind of consolidation around here. If you go to 4-hour chart, see, it looks even more messy. All right, so we're looking some form of consolidation. I mean, the only trade plan that I can think of is not the best trade plan, a short-term trade plan, but if it breaks this previous low, right, high chance we are moving back to support level around the 19,800 or so. Okay, from here, you can see the 4-hour trend is starting to unravel, it's starting to come down. Okay, if you break a previous low, high chance that we'll come back to support at around 19.8. Okay, but that's Nikkei for you. Let's go to Hang Seng now. Okay, Hang Seng. I think I drew this circle a couple of weeks back. Okay, so the Hang Seng, I think I did mention this one or two webinars ago that it was in a bullish flag scenario, and bullish flag scenario is a continuation chart pattern. So not surprising when it broke the bullish flag, all right, it just went higher and higher, even breaking the previous high of around 26,095. Okay, let's go to a lower term time frame, the 4-hour chart. Okay, you can see the strength of the breakout. All right, so I'll still be bullish on the Hang Seng. Not right now though. I'll be patient. Let it make a pullback. I'll show you to which levels, but I'm still looking for bullish entries. Okay, let's go to the 1-hour chart. All right, so what you can see is the support here. So support here. Let me delete some lines for you. Okay, this is a Hang Seng 1-hour chart. So what I'm looking out for, right? I mean, like I always mention, trading is a game of probabilities, right? And even if you're bullish or strongly bearish, it does not mean you just buy and sell immediately. Okay, because I mentioned this many times, analyzing the charts is one thing, being a good trader is a totally different thing. So even, let's say if you are bullish on the Hang Seng, like where we are right now, okay, for me it's a bit too close to the previous high to do anything about it right now. Previous high was around the 26,647. Currently, you see, this is a bit too close. And the things that, where can you put your stop loss? Okay, if you put your, let's say if you take a buy right now, if you put a stop loss below this swing low just because you think that, okay, if it breaks this swing low means it's coming down further, that's a logical level for stop loss. But the most realistic target you can set is the previous high here. So you just measure your distance to your target and your distance to your stop loss. It's a very clear-cut case of a negative risk to reward. So not a good trade anymore, isn't it? So let me just take away the drawing tool. Okay, so for the Hang Seng, I would prefer coming back to the support level of around 26,400 and then decide what it wants to do. All right, because right now, yeah, the 4-hour everything's supporting it. Daily moving average has yet to catch up. 4-hour has established a bit of a bearish spring candle, so I'm more keen to see around 26,400. See whether we can look for any more buy positions over there. All right, and you can see here that there's a bit of a bearish divergence. It has already occurred. Okay, so take a note near 26,004, if not near 26,003. Okay, but definitely looking bullish to the upside for the Hang Seng. Okay, you guys got any other indices that you want me to cover? Okay, if there's no more indices, let me move on to FX. Let me take a 10-second pause and I'll start on FX. Oh, sorry, there is a question on FX. There's a question on indices. Singapore blue chip, okay. Okay, thanks for bringing this up. Singapore blue chip, very nice clear breakout. Okay, quite similar. I mean, it's one of the indices that has made new highs besides the US indices. Because if you look at the European indices, they don't do the same. Yeah, still stuck in some form of consolidation, but Singapore blue chip has made a new high. Okay, so this is a very clear-cut bullish chart, breakout of a consolidation pattern for May, June, July. Very clear breakout. Looking at the 4-hour chart, nice moving average to the upside. Okay, what I'm a bit more concerned is there's a bit of a divergence here, bearish divergence. So you can see that the MACD is pointing to a lower high, price is making a new high. Okay, so there's a bit of divergence, so there might be a pullback coming in. Okay, so even though I said there's bearish divergence, doesn't mean the trend will turn bearish, right? What I mean is that if a MACD or any form of oscillator shows a bearish divergence, it means that the momentum is waning, or the momentum is slowing. Okay, so for this case, the uptrend momentum is slowing. All right. In fact, if you see the 1 hour chart, you can see the MACD is rather downtrend, but the price making higher highs and higher highs. Okay, so there's a bit of a bearish divergence. What I would hope that might happen is that it will consolidate back to the support level. Okay, so for those who have missed out on this breakout entry, it's a beautiful breakout. Look at this. It's a nice breakout candle close above the key resistance level at around the 368.5 area. Nice pullback on this red candle back to the previous resistance turn support, or I call it the scene of the crime, and it's pushing higher. It's pushing higher. Let's go to 15 minutes. Okay, so 15 minutes, yep, also has broken new high, start pushing higher. Okay, so that's Singapore blue chip. So what I would say is that I remain bullish. I would definitely remain bullish, but what I'll be keen to look out for is if it comes back to this support area around the 368.5 level. My stop loss can be below this previous swing low, and let's see whether the Singapore blue chip index has any more legs to run up higher. Okay, but definitely looking bullish for the moment. All right, Australian 200, sure. I've not seen this index for a long time. Let's have a look. Ooh, ugly. Yeah, that's the reason why I don't look at Australian index. Now I know why. So look at the Aussie 200. I mean, this is really sideways. You can see it's a giant head and shoulders with a double top here. But the only, in terms of trend trading, not much because there's no trend. But what I'm keen to look out for is basically this whole support area. Okay, you can see touches here, resistance here. So just take note of those levels. Okay, because right now it's just consolidating. So the nearest level, key level look out for is the around the 3658, 3660 area, because there's support. Okay, it might start bouncing from support and consolidate back to the 580 or so. Okay, so just take note for the ASX. You can see there's a big drop today. Okay, I think it's the RBA minutes this morning. Okay, but again, the support level take note of is around the 5668 area. Okay, in terms of trend, really nothing much of the trend, because it's just been moving up, down. It looks very spiky. All right, China 850, sure. Okay, China 850. I drew this line last week, and wow, look at the price. Respect exactly to a dot. Okay, so China 850, we know that it's bullish. We know that the key resistance is around 11,008. Okay, everything looks to go to the upside. Okay, if you look at the 4-hour chart, same thing. I think this is a channel I drew last week, but it looks nice and bullish. Okay, key thing to look out for is back to this support level, and then 11600 somewhere here. Just draw my here. Okay, so look out for support levels around here for you to take it up further. Okay, if you look at the 4-hour chart, daily chart, looking nice and bullish. So I'll be looking at back at support here at around 11,600 to see whether there's any more opportunities to go to the long side. Okay, but definitely looks bullish. Okay, so when a trade is looking very bullish like that, right, don't try to chase it. Okay, because the most important thing is always think about risk. Because let's say if I buy right now, if I think the daily and fall is very bullish, I think if I buy right now, question is where's my stop loss? If you're telling me that my stop loss will be below the previous low, then I must stick to a low one. Okay, so that's the China A50. Did I answer your question, Kunath? Okay, so I'm going to move on, take a 10-second pause before I move on to the FX markets.